President Trump basically gambled on a swift entry and exit, and now he's struggling to find the off-ramp because his credibility and ego are at stake. Last night, the Federal Reserve kept the Fed funds rate unchanged and signaled just one rate cut this year, and the central bank also confirmed that private sector job creation in the US has come to a standstill, which is not great news for the world's largest economy.
It's really creating ongoing demand for each new generation of Nvidia architecture. And then the flip side of that comment is, well, what's the sort of lifespan of these architectures? You're going to want to be on the best and greatest.
Prototypes are easy, real products are hard. Consumer adoption is even harder, right? Just wait. Instead of just announcing stuff. Google is also at fault. Google has announced so many things that I thought were fascinating demos that just have quietly disappeared, right? So, the right thing to do is do it behind closed doors.
Markets, business, technology, investing, insights. AlphaTarget PULSE. AlphaTarget PULSE is a production of AlphaTarget Limited, a company registered in Jersey Channel Islands. The opinions expressed in this podcast and the information provided are for informational and educational purposes only, and are not to be construed as investment advice. You should consult with your own registered investment advisor or other qualified financial professional before making any investment decisions.
Welcome back to AlphaTarget Pulse, your podcast for insights on markets, business, technology, and investing. In today's pod, we will cover the ongoing conflict in the Middle East, the latest FOMC decision yesterday, Nvidia's GTC event, as well as the repercussions in the financial markets. Before we proceed, let's now bring in our analysts to join the discussion. First and foremost, Damia, our data queen, former analyst who previously worked at Citibank and investment banks, is not here today as she's on vacation. Next, Irnest, our numbers man, CFA charter holder, top-ranked analyst in South Africa, and former analyst at Societe Generale. How are you doing, Irnest?
Fine, and you? Thank you.
Good. Next up is Anirban, Mr. Bleeding Edge, PhD in computer science and former director of research and portfolio manager at the Motley Fool Australia.
Hi, Puru, how are you?
Good, thanks. Finally, we have Oyvind, our big picture guy who previously worked at Peel Hunt, Berenberg and Asio Family Office as a sell-side analyst and investor. How are you doing, Oyvind?
Hey, all good.
So, before we proceed, we would greatly appreciate if you could please hit the like and subscribe button, especially the subscribe button, because this really helps with the algorithms and the discoverability or the discovery of this podcast. So let's kick off by covering the latest developments in the Middle East. Almost 3 weeks ago, the US and Israel attacked Iran and they killed the supreme leader. Iran has retaliated by launching missiles and drones towards its neighboring Gulf countries, with US air bases such as Bahrain, Oman, Qatar, Saudi Arabia, and the UAE. Last night, we heard that Israel attacked Iran's largest natural gas field, and the nation retaliated by attacking an energy asset in Qatar, and Iran has threatened more strikes on oil and gas fields in the Gulf countries. Meanwhile, Iran continues to send missiles and drones to its neighboring countries, and it has effectively closed down the Strait of Hormuz, causing the price of oil to spike, which in turn is putting pressure on consumers all over the world and raising the prospects of inflation. So all in all, this is not a good situation for anybody, not least of all people getting bombed in the Middle East. I think President Trump basically gambled on a swift entry and exit, and now he's struggling to find the off-ramp because his credibility and ego are at stake. Last night, the Federal Reserve kept the Fed funds rate unchanged and signaled just one rate cut this year, and the central bank also confirmed that private sector job creation in the US has come to a standstill, which is not great news for the world's largest economy. Clearly, the conflict in the Middle East is still ongoing, and it has triggered some volatility in the financial markets. But if history is any guide, this is likely to be a short-lived dip, And after some near-term pain and downside, stocks should soon bottom and embark on the next leg higher in the ongoing bull market. Well, as you know, the past few months have been painful for technology investors, and AI and software stocks have come under intense selling pressure. In fact, this has been technology's worst performance, as we mentioned last time, relative to world equities, ex-tech, in over 50 years. So there is scope for mean reversion, and there are signs that AI and software stocks are now basically showing some relative strength, and some may have already bottomed out. Interestingly, the mega caps are now getting sold. Usually the generals of the army get shot in the end. So the indices such as the Nasdaq 100 and the S&P, which were relatively robust up until now, are now basically cracking and rolling over and starting to underperform on a relative basis, which is what we would expect to see at this phase of the sell-off. So where are we in terms of the stock market? We think that there is potentially some more near-term downside ahead, especially for the indices. We may get a final flush lower. Already the greed and fear index is close to 20, which is pretty low, but it can drop to single digits. Positioning is very, very bearish. Most of the active money managers are hedged. The put-call ratio is very high. The McClellan oscillator recently signaled an oversold reading. Most of the stocks in our portfolio are severely oversold on the weekly charts. So we are likely getting near the end of this leg down. We may need to see maybe some panic selling over the next 2 or 3 days in response to the Fed's decision to do nothing. But I think as a team, we think that the market will likely carve out some sort of a low, and then we will see a ferocious rally, especially if the war ends or if there is any de-escalation in the region. So guys, what do you make of what's going on in the world, especially in the Middle East? I'll come to you first, Irnest.
This whole war is, as you pointed out, we all hoped this would be a fairly swift and fast entry and exit, but it just doesn't seem like there's any off-ramp easily in sight anytime soon. And I guess one just sits and hopes that the powers that be will come to senses and try and get things wrapped up quickly.
Anirban, would you like to add something?
Yeah, well, the first thought is that anyone in the Middle East and is, in harm's way, and I feel for them, and it's really a tough situation for people there. But as you just pointed out in your opening remarks, I think the bigger issue is, the gas prices go up. And when I say gas, I mean petrol and natural gas. These go up. These actually really have worldwide ramifications. I mean, we are seeing many countries, for example, in the subcontinent, which are going to 4-day weeks. Some of the poorer countries have got lines actually now for petrol. And, I'm seeing, $2 plus, $2.50 plus petrol prices here in Australia. So I think this has global ramifications in terms of, inflation. And the other thing I want to point out is the hit on these oil and gas infrastructure. This is not just a short-term disruption. This actually has really a follow-through effect. It takes a while to fix these things and bring them up online and get back to the original capacity. So I'm not a happy camper with any of these things. Not a happy camper.
Well, it is pretty remarkable with the comments made by President Trump when he said, well, he did not anticipate that Iran would retaliate against the neighboring GCC countries and that they would shut down the Strait of Hormuz. I mean, this is pretty remarkable that, a sitting president in the White House did not imagine this. And we also heard a couple of days ago that one of his security staff member resigned because he doesn't agree with the war. He doesn't agree that Iran basically posed any imminent threat to the US or its security. And basically they think that this war is basically being fought under false pretenses to support Israel. We are not geopolitical or political analysts, so we will refrain from making any comments. But it just seems pretty remarkable that they would get involved and put their hand in the hornet's nest without any clear plan. And now we are seeing the fallout of that in the neighboring countries. And as Anirban pointed out, in many other countries, especially in the developed world, which basically rely on imported oil from the Middle East. The near term is likely to be choppy. We think that inflation may actually tick up, especially if the price of oil stays higher, which means the Fed's not going to be able to cut rates anytime soon unless we do get a recession. So the near-term outlook for equities, especially for the large caps, which haven't really rolled over yet, is pretty weak for the next week, 10 days or so. Our portfolio is hedged. We put on our NASDAQ 100 hedge, 150% of our long exposure about a month ago. So by all stretch of imagination, this has not been an easy time for any of us, especially growth stocks, which have come under severe pressure. But at least the portfolio hedges are now, doing their job and, protecting the portfolio from very nasty down days. With this out of the way, let's move on to Irnest and discuss Nvidia's recent GTC event. Jensen Huang made a lot of noise recently. The market was very ecstatic. The stock price not so much because of what's going on in the Middle East. So would you like to share your thoughts, Irnest? This week's flagship event, they're at the heart of AI, and one often gets insights on the space from Jensen Huang. Was there anything that stood out to you from his comments and his keynote speech?
Thanks, Puru. I mean, it's always an event that has a lot of information to digest. For today, I'm just going to focus on three things. One is the massive growth in computing demand that we're seeing. Then the expected investment, and also I'm going to touch on power efficiency. So the first one is this issue of growth in computing demand. Now, Nvidia CEO Jensen Huang sort of estimates that in the past 2 years, computing demand has increased by 1 million times. He says that the inflection point of inference has arrived. So the way he breaks it down is he says that the complexity of the type of work that one does with these models is getting more and more involved and requiring more and more compute per work unit, also getting more accurate and better. And he estimates that growing at about 10,000 times. And then there's the usage, which is obviously in a massive growth trend. He estimates that at about 100 times. So when you combine the two, you get his estimate of 1 million. My feeling is, it is from a lower base, obviously. There's far less people that were using it 2 years ago. And probably we won't see that type of jump in the years ahead. But nevertheless, I think what's important is that this shows you that the demand is growing massively. And it's actually quite staggering.
But how is this translating into and driving investments in the AI infrastructure space?
The demand obviously has to be tempered with the efficiency of these and the power of these computing devices. So Jensen Huang mentioned a visibility figure of $1 trillion in AI infrastructure spend on their current latest architectures going through to 2027. The same sort of visibility number a year ago was 500 billion. Now, these are huge numbers. And importantly, they're going up a lot. That's the important issue. I think the exact quantums and sizes and timings is not all that important to me, at least. It's more important that it's really huge numbers and that they're going up a huge amount. We've seen the hyperscalers lift their capex forecast for 2026 dramatically. And I think the numbers that Jensen is putting on the table really suggest that there's going to be no slowing down or reducing of that for some time. And bear in mind, this is their current architectures. So it's Blackwell and Rubin, and it excludes a few other things as well. So there's a hell of a lot of other AI infrastructure around, And there's a lot of related spend. So it's not that this is the total spend. So, what it all says to me really is it appears like there's a fairly long way to go in this growth cycle. And I think what's important then is if there's so much spend happening on all this infrastructure, there's going to be increased focus on what are the returns from it.
I mean, that all makes sense. It's interesting. What caught my attention was the recent comments from Andy Jassy, the CEO of Amazon, where he basically doubled the AWS's 10-year revenue forecast and said that because of AI, AWS's revenues will compound, I think, about 17 or 19% per year, which is phenomenal. That, the CEO of Amazon, he himself underestimated the impact of AI on their workloads at AWS, and they've basically doubled it going out for 10 years. So it just goes to show you that although the CapEx spend is pretty high by these hyperscalers, they clearly anticipate, significant revenue growth over the next, 8 to 10 years due to AI, largely due to inference. I'll come back to you, Irnest, for another question. In terms of efficiency, are the chips getting more efficient? And what impact does this have on this space, in your opinion?
Yeah, this is very important. It's an ongoing evolution. And the chips are getting two things. One is faster, i.e. better, and more power efficient, which is very important. What was put forward in the GTC event is that the new architecture, the Vera Rubin, is both much faster and at high intensity. It's between 10 and 35 times more power efficient than the previous generation of chips. So, they keep on showing significant advancements, in that sort of range, 10, 30 times, etc. each year, or each time they bring out a new chip architecture. And I think also one's got to mention that there's a huge amount of ingenuity that goes into eking out these benefits all the time. It's not just a small incremental gains. In fact, sometimes they have to actually reimagine how the whole chip works or how all the parts talk to each other. I think what's important here is that if you have a data center, you typically are power constrained. So you have a certain amount of power, call it 1 gigawatt, and that's fixed. So what's important is you have to have the most efficient systems running inside on that power to generate the most type of compute. And the more compute you can generate with your power, the more tokens you can get, and the more tokens leads to more revenue in this new AI world. So I think it's really creating ongoing demand for each new generation of Nvidia architecture. And then the flip side of that comment is, what's the sort of lifespan of these architectures? You're going to want to be on the best and greatest as best as you can.
Makes sense. Oyvind, you also tuned into the keynote address from Jensen Huang and basically the other comments. What were your takeaways from the event?
I thought it was interesting that the Nvidia stock just didn't really move much on the announcement of the $1 trillion number. And like Irnest mentioned, that 1 trillion number was just for Blackwell and Rubin, and not including other things like Grok, which I think was said would add another 25% on top of that. So my feeling is that Jensen could have said even more ambitious numbers, but it kind of just falls on deaf ears at this point. So it seems the market really wants to first see greater ROI and revenue growth from the AI build-out before Nvidia gets that credit. Jensen did try to address this, though, making the comment that if certain companies were public and investors could see the growth numbers that he could see of $1 to $2 billion of growth per week, they would also share his optimism. But yeah, I guess the Nvidia bulls will just have to be patient for now. The other thing I thought was quite interesting was the announcement of Nemoclaw. So this essentially adds security and privacy for the hugely popular project OpenClaw. And this was really the main issue for OpenClaw because it was widely viewed as risky due to like limited built-in safety features. So yeah, Jensen is very bullish on this because he sees OpenClaw as like the operating system for personal AI, and thinks that, just like every company has a cloud strategy, they will also need an OpenClaw strategy. So it'll be interesting to see how much traction it gets and if this kind of further accelerates adoption of OpenClaw and it becomes like more and more mainstream.
Well, the stock didn't really move. I think that's a major plus in today's market. Everything else is going down 4 or 5% every single day. Micron announced pretty solid numbers last night, and the stock's down. And I always like to say, it's not the news which is important. It is how the market responds or reacts to the news, because the stock market is a discounting mechanism. It looks 6 to 9 months ahead. So whatever the stock is doing today is not basically moving on what the company did in the last quarter. The market, with its collective wisdom, rightly or wrongly, is forecasting what this business will look like 6 to 9 months from now. And if we do get an economic slowdown or the dreaded recession, then these numbers will get hit and revenue growth will decelerate. And I think that's what the market is worried. And that's why we are basically seeing, either the stocks basically treading water or going down because of this conflict in the Middle East. Anirban, I'll come to you next. There's been some fresh news out this week regarding Walmart and OpenAI's Agentic commerce partnership. What's happening there, and what do you make of these developments?
Yeah, thanks, Puru. Quite interesting, actually. So it looks like Walmart is basically scrapping the instant checkout feature that ChatGPT was rolling out. They're scrapping it after doing some tests late in 2025. And this basically feature was an opportunity for, if you're on ChatGPT, to directly purchase items from Walmart. And I think the issues they identified were, there's just an issue with experience, lots of issues, inaccurate items, wrong cart, the customer experience was just not that great. Conversion rates were poor. This relationship is not dead, but what Walmart is doing is now it's basically embedding its own agent, which is called Sparky, directly into ChatGPT. And apparently it's going to be rolled into Gemini soon, and then potentially into Claude and maybe others. And the idea here is that, say you're in ChatGPT and you're looking for, maybe, cheap meals for the family or something, or some toys or whatever. And it might decide that, okay, it's going to, based on conversation with you, that it's going to, you want to shop at Walmart. And then it hands over this discussion to Walmart's agent. And then inside Walmart's agent, everything else happens. So I think this is an interesting, example of what may happen or what's happening and what people are experimenting with. So it looks like Walmart is trying to use ChatGPT and others as basically a distribution agent, but it's unwilling to sort of, expose maybe its data sets and its APIs or, its environment or information about users back to the LLMs, which I think is interesting. And so it's what is interesting here is that I hadn't thought that these guys would be sort of thought of as as distribution agents. I think that's an interesting angle, and maybe this takes off because if they are popular, they're used by millions of people, hundreds of millions of people, then they are actually a proper distribution agent. And there could be ads, and there could be this handoff mechanism, and ChatGPT or Gemini or Claude or whoever else, or Grok, they can get paid for making this transaction happen, or basically transferring this dialogue back to another agent. So I think this is interesting, and I think again, it shows how things are at an early day, and there's going to be a lot of experimentation back and forth before we sort of come to any sort of fixed mechanism and how these things are going to work out.
I mean, shifting gears, there's big Metaverse related news hitting the wires this week from Meta. We all remember, the stock tanked when Mark Zuckerberg announced massive capex on the metaverse a few years ago, and then some prominent hedge fund managers wrote letters to Meta to try and scale back on this capex, and the company basically scaled back, and then the stock took off. So what's the latest on Horizon Worlds, Anirban, and what does this say about the state of the metaverse ambitions overall?
Yeah, I thought this is the non-AI but AI related news, and I thought this is interesting because back in like late 2021, Zuckerberg basically bet entire company called Facebook then into this idea of metaverse and renamed the company Meta. And his idea was that, people are going to live in this virtual world. They're going to have 3D avatars, and you're going to do your work, and work and play. Everything is going to happen through this virtual world, and you're going to wear these headsets and do stuff. I know Puru is already laughing. Many of us were laughing at that time.
Yeah, because the billionaires, one billionaire wants to send humans to Mars, and one wants to send them to a virtual world. They don't seem to be very happy with the real world.
Nobody's happy with the real world. But this is something on which, so they had this Reality Labs, and exactly as you pointed out, they got a lot of hits from hedge funds saying you are just sinking money, bad money after bad money after bad money. They spent close to $80+ billion on Reality Labs, right? And it's basically turned a few $1 billion of revenue. That's really it, right? So this whole thing is being actually shuttered. The VR version of Horizon Worlds is going to be dead on Quest headsets. I think there's like a final sunset day sometime in June. But, on the one hand, this is basically an admission that the metaverse did not happen, right? And now Facebook is stuck with the name called Meta. On the other hand, this is an example of type of bets that companies can make if they have strong founders and a lot of free cash flow. And despite all this money going down the drain, the company is still fine and it's pretty profitable these days.
Strong founders with, strong voting rights.
That's right. Strong founder with strong voting rights. That is the correct phrasing. So thanks for correcting me there. Strong founders with strong voting rights with, special privileges, definitely can do things that other people couldn't do. And, this is another example, I guess, that, the smartest people on the planet may not be right. Right? This is an example of, Zuckerberg basically being wrong. If I have to, Zuckerberg has a fascination of winning in hardware, and I think he's been bummed by the fact that he has to go through the gateway of Apple and gateway of Google, and has been trying to sort of, get into this. And what I keep telling people, and this, from the outside, this appears very simple and easy. It is not easy to do good hardware and software together. It's just extremely difficult. And, if you don't have your organization DNA built around it, you can try as much as you want to. You're just not going to get there. Again, this is very hard. And I think this is an area that a lot of people try, but they just don't realize that there's a lot of other things involved. It's very hard to break into an ecosystem play. But anyways, the AI connection here is, I think, Zuckerberg is taking all of the spend and that he was doing in this world and has now moved it to AI and is, going full steam into, building his own cloud infrastructure and, building his own, competing LLM, so Lambda and Lambda, plus and whatnot. So, the Llama models and, what else he's doing there. So I think it's interesting. So the CapEx has just changed, tens of billions of dollars are now, chasing models. So I think it's just interesting news.
It's fascinating that, but the one point I would like to add is that to his credit, it is a good sign when a company makes a big bet and then decides after a year or two or however long, no, it's not working, we shut it all down. And if they can try these things, and as you say, given he is who he is, and he's got the voting power, as Puru says, all credit to them. They can have a lot of shots at things.
So many companies try and basically get people to wear headsets and glasses and all sorts. Google had those glasses. Then they came out with that Oculus and stuff. People use this stuff as a gadget, as a gizmo. I don't see humans somehow, putting on these sort of helmets and masks and sitting in, a dark cave or in their room, with nobody around them and spending their whole life in a virtual world. I don't see that happening. I may be wrong. Call me old-fashioned, call me, an idiot. But I just don't see how the vast majority of people are just going to cut off completely from people, in the real world and wear these, gadgets and sit in a dark room all day long. I just don't see it happening.
Yeah, I mean, I agree with you, Ernest, on that point that, it is good for companies to experiment and have skunk works. I guess, my related point to that is I think companies, just like what Puru said, prematurely change your name. I think it's also good for companies to not announce these things. Like, I mean, when you're in a prototype phase, don't make a big deal out of it. Like, prototypes are easy, real products are hard, consumer adoption is even harder, right? Just wait. Instead of just announcing stuff. Like, I mean, Google is also at fault. Google has announced so many things that I thought were fascinating demos that just have quietly disappeared, right? So, I mean, the right thing to do is do it behind closed doors. Spend the money, for sure.
I mean, turning back to sort of the financial markets, we've seen this crazy volatility in equities. I've been doing this for 25, 26, 27 years now, actually 28 years, since the late 90s. And stocks now move so much in a day, in a session. I mean, this sort of volatility was unheard of, even 7-10 years ago. A 50% haircut in an equity now happens in, 2 or 3 trading sessions. It used to take months to get this sort of movement. So, with the, online trading and discount brokers and stuff, it's just so much easier for people to press the sell button and panic or buy or whatever, trade like crazy. And now with the NASDAQ basically talking about 24/5 trading, basically, which means, stocks will move like crypto every single day, Monday to Friday, that's going to create even more volatility and, increase the, the sales for maybe Prozac or something, because a lot of people are coming to the severely, sleep deprived and depressed and so forth. So I think, it's just a sign of the times that, things which worked 10 years ago don't necessarily work anymore. I've been hedging using, index future shorting for 10 plus years, around 10 years. And now we have seen, the things have become so uncorrelated that certain factors or certain sectors and stuff within the stock market basically move completely uncorrelated to the index. And, that's why growth stocks are down 50, 60, 70%, 80% in some cases. And the indices are down barely 5 or 7% from the highs. So if you're basically hedging a portfolio of growth stocks by shorting the indices, it's just not happening anymore. And, we are now working as a team to try and find a better way to hedge. And, when something doesn't work anymore, you have to, face reality and say, okay, this is not working anymore. Insanity is, doing the same thing over and over again, expecting a different result each time. And, we're not going to do that. So we are going to have to, come up with a way of, we are actually working on it already, to try and find a better way to hedge this portfolio by using put options on the individual stocks in the portfolio, because then at least you're hedging the stuff which you are long rather than, being long apples and shorting oranges, which is clearly not working these days when the market has become so uncorrelated. So, the drawdown we have experienced over the last 2 or 3 months has been pretty sharp, along with all the growth stocks going down. And, this is despite us hedging the portfolio, but the problem is the hedges are not working, as we just mentioned. So, we are now coming up with a new way of protecting the portfolio, and getting a true hedge as opposed to, doing it through an index short. So we will be announcing that change in strategy over the next few days once we finalized everything and once we remove the current hedge from the NASDAQ to unhedge the portfolio, hopefully near the lows. Well, we've covered a lot of ground today. Damir was not here, unfortunately. We had a good discussion. So we would like to thank all our listeners and viewers for tuning in. We'll see you again in a couple of weeks. And before we leave, we just want to mention that AlphaTarget publishes deep research on disruptive, rapidly growing companies in the public markets. We invest our own capital in these companies, and then we issue research, published research, institutional grade research of all these portfolio holdings. Our subscribers receive a monthly report with full equity research reports on all the holdings, fundamental technical analysis, expert insights, and so forth. Our DCF valuations, the whole lot. We also send out weekly updates every Monday covering all the news flow and the quarterly earnings and so forth of the past week. And we also include the stage analysis, which is basically the technical analysis of all the stocks in the portfolio. And we also send out trading alerts to all our subscribers in real time via SMS and emails whenever we make any changes to our own portfolio via buying or selling stock or adding or trimming a position or even putting the hedges or removing the hedges. We notify all subscribers via trading alerts so they can keep track of what we are doing with the portfolio. If you'd like to learn more about our research subscription, please visit alphatarget.com, and please don't forget to hit the subscribe and like button on YouTube. Thank you very much, and see you again in a couple of weeks.
Thank you for tuning in to AlphaTarget Pulse. We publish deep research on disruptive, rapidly growing companies we invest in. Our subscribers gain exclusive access to our entire portfolio, including exact portfolio allocations, in-depth research, coverage of companies' news flow, and our earnings breakdowns, trading alerts of our portfolio moves, and our proprietary hedging indicators. You can find subscription information at alphatarget.com. We'd love to have you join us there.